Dollar strengthens as Fed uncertainty and global risk aversion bolster safe haven demand. The US dollar surged to a fresh 4-month high against the euro on Tuesday, buoyed by fading expectation of another Federal Reserve rate cut this year and renewed demand for safe haven assets amid deepening global risk aversion. Market reflected as distinctly cautious mood, with equities retreating and government bonds gaining favor as investors sought refuge in traditional safe haven currencies such as the US dollar, Japanese yen, and Swiss franc. Michael Braun, senior research strategist at Pepperstone, described the move as an old-fashioned flight to safety, emphasizing that despite recurring debates over the so-called death of the dollar, the greenback remains the world's most trusted haven in turbulent times. The dollar's upward momentum extended the rally ignited after last week's Federal Reserve meeting, where policymakers cut interest rates as expected but offered little clarity on further easing. Chair Jerome Powell signaled that another cut in December was not a given, prompting traders to reassess their expectation. In the days following the meeting, Federal Reserve officials voiced divergent opinions on the US economy's trajectory, further clouding the outlook. The absence of key economic data, halted due to the US government shutdown, has only amplified uncertainty. According to CME's FedWatch tool, traders now assign a 65% probability of another rate cut in December, now sharply from 94% a week earlier. The recalibration in expectations sent the US dollar index above the 100 mark for the first time since early August, with the greenback last trading at 100.17. The euro slipped 0.3% to $1.148, its weakest level since August 1, marking its fifth consecutive session of decline. Against the yen, the dollar fell modestly by 0.5%, though the Japanese currency remained near an 8.5-month low. The Japanese yen managed a modest rebound after the Bank of Japan held interest rates steady last week. However, its persistent weakness continues to concern policymakers. Finance Minister Satsuki Katayama reiterated Tokyo's readiness to intervene with a high sense of urgency should volatility persist. Analysts note that the yen in nearing levels that previously triggered intervention in 2022 and 2024. The situation is further complicated by US President Donald Trump's recent criticism of governments that permit excessive currency depreciation, arguing it provides an unfair trade advantage. Katayama's next step, therefore, are likely to be measured with caution. Investor sentiment turned decisively risk-averse on Tuesday. The Australian dollar weakened by 0.7% to $0.6496 after the Reserve Bank of Australia left rates unchanged at 3.60%, signaling a cautious stance on further easing. Meanwhile, Bitcoin slumped 2% to $107,486, its lowest level since June, reflecting the broader retreat from risk-sensitive assets.